Hello class, and welcome to our today's lesson. In our today's lesson, we are going to look at the control accounts. The control accounts, just as the word itself suggests, they are accounts that are used to control certain ledger accounts. In this particular case, we shall find out that using control accounts in manual accounting system and how to prepare the sales ledger control account, as well as how to prepare the purchases ledger control accounts are very helpful as far as accounting is concerned. When we talk about control accounts here, these accounts are used to check the accuracy and correctness of posting entries in ledger to which control account belongs or relate to. The control means that the total of the control accounts should be the same as the totals of the ledger accounts. The two main types of accounts are actually the sales ledger control accounts and the purchases ledger control accounts. So if I can start with the sales ledger control accounts, the sales ledger control accounts, it is actually a control account that is used to record or to control what we normally call the debtors. If a business sells its goods on credit terms, then we are going to have the debtors. Remember, I want to take you back and maybe remind you that debtors normally arise as a result of credit sales. That's why the sales ledger control accounts, it is sometimes referred as the total debtors control account. One thing that you should be able to understand here is this, that in a particular financial year, we are going to have so many debtors in that particular financial period. The sum of the debt these particular debtors are going to owe the business should actually be the same as the balancing figure for the sales ledger control account. Actually, what I'm trying to say is this. In one financial year, we can have hundreds or even thousands of debtors that are involved in that particular business. The sum of the balances of these particular debtors in the whole financial year is actually what is being controlled in the control account. So let me say this. When we talk about an individual debtor, that debtor will purchase goods, or we are going to sell goods to that particular customer. That particular customer is going to return part of the goods. That particular customer is going maybe to pay for those goods at a particular point. At some point, we can extend some discount to that particular customer, and so on and so forth. All those transactions that are being undertaken by the customers are normally summarized in this particular sales ledger control account. So the sales ledger control account is going to contain a summary of all the transactions that have taken place in the business regarding all the credit sales that were made in that particular financial year. So a ledger account, we normally have two sides. We have the debit side and the credit side. Similarly, the sales ledger control account is going to have the debit side and the credit side. You will find that on the debit side, we are going to record items which increase the debtor's balance. That is to say, anything that will increase the amount of money that we are supposed to receive from these particular debtors, that particular entry is supposed to be recorded on the debit side. And you'll find things like the credit sales. If you sell goods on credit, then it simply means that the amount of debtors is increasing. In case we have a dishonored check, remember, it is a check which was received, but upon taking it to the bank, you find that now that particular check is not being accepted. Once it is dishonored, it increases back the amount of money that we are supposed to receive from the debtors. Remember, when the check was received, we reduced the debtors. But once it is dishonored, it increases back the amount that was initially reduced. We are going to have also a case of interest charged on overdue accounts. If, for example, a debtor has delayed paying his account, we can charge some interest for delaying paying that particular amount, and that actually still increases the amount that we are supposed to receive from that particular debtor. So at the end of the day, you will realize that, the dishonored checks will actually increase the amount that we are supposed to receive from those particular debtors. And sometimes then you will find that the amount that we refund is going to increase the amount that we are going to receive in total. So what runners need to know at this particular point in time is that those items that increase the debtor's balance are all supposed to be debited. Then we go to the credit side. The credit side, now we record the opposite. Items that decrease debtor's balance. Items that decrease debtor's balance. They are the amount of money that the debtors have paid. It will reduce the amount that the debtors are now going to be owed. We have the return inwards. We have the discount allowed. We have the contra settlement, what I'm going to explain shortly, and then we have the bad debts written off. This will reduce the amount that we are supposed to be paid by the debtors. Note that if we receive money, the debtors are reducing. If goods are returned by those particular debtors, then the amount that we are demanding from them is reducing. If we have discount that we have extended to them, what we call discount allowed, then what they are supposed to pay is reduced. We have a case now of the bad debts. Remember, bad debts is a debt that is proven to be unrecoverable. So in that particular case, if so and so has been proved to be a bad debtor, then you will find that you are reducing the amount that you are going to receive from the debtors if you reduce that amount because you have written it off and you don't expect it to be paid. When we go to the contra settlement or a set-off, it is a case whereby the business and the debtors are actually operating in such a way that the business owes the debtors a certain amount, while the debtors owes the business a certain amount of money. So the two of them are actually debtors and creditors of one another. If, for example, person A and person B are operating in such a way that A buys goods on credit from B and B buys goods on credit from A, then you find that A is supposed to pay B and B is supposed to pay A. Then you'll find a case whereby if A is supposed to pay B 500 and B is supposed to pay A 300, then you find that the difference, which is 200, is what the other person is going to pay, and then they settle off that particular debt. So a case whereby we have such kind of a scenario, then such transactions, we normally call them the contra settlement, whereby what I owe you and what you owe me, they cancel out, and then it reduces the balances that we're going to see. So in a ledger account format, this is how the sales ledger control account is going to appear. So on this side, we have the items increasing the debtors balance, which we have discussed here. And then on this side, we are going to have the items that decreases the debtors balance, which we have discussed in this particular section. Don't forget that in the question, you are going to be given the opening balances, which we are supposed to record here and here, if you are given both of them. And then at the end of the day, you are also going to be given the closing balance, which you put it here, and then you calculate now your own closing balance as we are going to demonstrate. So here it is actually a scenario whereby you are told that draw a sales ledger control account to record the following details relating to a business. We have got a sales ledger debit balance. This is at the beginning. It is this. Remember, this one is going to appear. Remember, sales ledger controls debtors, and debtors will normally have a debit entry. So this one is going to appear on the debit. We have credit sales. It increases the debtor, so it's going to be debited. We are going to have the total checks received from customers. This one reduces because they are paying, is going to be on the credit. We are going to have a cash received, again, is going to reduce. The debtors is going to be credited. And then we have total return inwards. Again, it reduces, going to be credited. Sales ledger balance at the end, this one, which is now going to be captured at the closing balance. Then, once you have that question, you can come here. The opening balance, we said, is going to appear here because actually it is a debtors, and debtors normally have a debit balance. The items that increase, in this case, we had the credit sales, which is captured here. And then here we have the items that reduce, which is actually the checks received from debtors, cash received from customers, return inwards. All of them are supposed to be captured here. And then we put now the closing balance as indicated here. Then you get that the totals of the two sides are now the same. And we can actually say that you have controlled that particular account. That is basically how the sales ledger control accounts works. What is important for you to note is that on the credit side, we record the items that reduces. Items that are reducing is either cash received, checks received, return inwards. We have issues of bad debts written off. All of them are going to be here if the questions or if the question contain them. Then on this side, we have the items that actually increase the debtors account, whereby we have the credit sales, the dishonored checks, the refunds, and we also have the interest or penalty that is charged on the overdue accounts. Upon doing that, you remember also to put the closing balance, and then you realize that the opening balance will be actually indicated. And the opening balance can actually be appearing on both sides. You can be given a case whereby the opening balance, we are given two figures. The first figure you are told is debit and the other one you are told is credit. If that is the case, put them as indicated. The figure that is a debit, you put it on the debit side. The figure that is credit, you put it on the credit side, and then you go ahead. What is important for you to note is actually the closing balance. The closing balances, they normally interchange the position that you have been told. If you are told that there was a debit balance of a certain amount, if it is a debit balance, you record it here on the credit. And if you are told that the closing balance is a certain amount, you record actually on the debit. So actually they normally interchange. That one I'm going to demonstrate in the video that I'm going to share next. Otherwise, this is an area that is very easy for you to understand. And the questions that normally come to this particular, in this particular section are actually straightforward without any kind of twisting, and you need to score good marks in this particular scenario. So when I'm going to present the next video for the next lesson, I'm going to share a very comprehensive kind of a video whereby now you will be able to understand how to do it better, and then you will see how easy it becomes. Otherwise, have a nice time and enjoy your moments. Thank you.